Hey guys, my name is Ann Kimani and this is Ann Kimani. Thank you so much for joining me. I really appreciate you for clicking and I really hope that you're staying safe and staying positive at this time. So guys, today we'll be discussing about the stock market. As you are aware that there has been a decline, there have been such a big decline in the stock market, and also we get to understand what does that mean to you if you're a first-time investor, and if you own some shares, do you increase the value of your shares by having, of course, more shares in your portfolio. And guys, before even we move further, let's first of all see where we are at in the stock market and the reason why we are where we are at. And since the first case of COVID-19 was announced or confirmed in Kenya, that was on March 13th, the stock market really flopped or has really flopped. We saw the stock prices for big companies, including the blue chip companies, really declining with such huge amounts. And what normally happens is when a crisis attack or hit a particular market or an economy in general, and in this case we have the COVID-19, business are usually really affected. We have the disruption in the supply chain, we have disruption in the domestic production, there are no sales, like the impact is felt by even the employees, and we can all witness the various or the many retrenchments that are going on. And so we want to understand how does that crisis now affect the stock market directly. And in the stock market we have people we call investors. Investors are people like you, me, any company, as long as you own shares or trade at NSE. And what happens is the investors reacted to this crisis, and the reason they're reacting to the crisis is because their investments have been exposed to the risk of the businesses they have put their money in terms of shares. The performance of the businesses they have put the money in has been affected. So what they do is they dump their stocks. They basically withdraw from the stock market, dump their stock, and transfer their money into more maybe safe or predetermined markets like the bonds. So there usually are a lot of panic sales. The investors don't care whether they're making losses or profit as long as the stocks are out of their way, right? That's the reason why we saw the NSE really halting the trading. I think it was on a Friday until the following Monday, because they're like, hey, okay, these stock prices have really changed drastically, because you check, then the one minute has dropped with 2 bob, the other minute has dropped with 5 bob. Like, it was quite crazy. And I really hope, guys, that we see how volatile the stock market is, and mainly because it's usually triggered by investors reaction and emotions. And I know maybe you're wondering, how does now the selling bit affect the decline of the stock prices? And I won't assume that everyone has attended an economics class. I also didn't. I am in the finance background. So what happens is, in this situation we have so many sellers. Every investor wants to sell. On the other hand, the buyers are very few. So what that means is the buyers will dictate the prices. They'll be like, okay, you know what, I'm not going to buy your stock price at this amount, I'm only going to give you this amount. So the buyers go with the lowest bidder, or the person who is selling to them at the lowest cost. That is why you find the stock prices really drop every single second, because if you find someone selling at a lower price, you buy it, because very few want to take the risk, or very many are running away from the risk. What does that mean to you as a first-time investor? And so there's a quote by Warren Buffett that says, be fearful when others are greedy, and greedy when others are fearful, right? And also there's a quote that says, buy when it's low, and then sell when it's high. So at this point, I would say it's an opportunity for you to be able to buy or invest your shares for those companies that you've always desired. There are 5 things that I'd like you to consider when you're buying the stocks. Number 1, when you're coming in to buy for the first time, buy with a long-term goal mindset. What does that mean? Don't come in with a short-term mindset that after 2 months, 3 months, 6 months, you'll be able to trade your shares and earn some profit or have a share appreciation, because no one who knows about tomorrow, no one who can predict what will happen to the stock market. We really hope that the economy will not be so much affected, so that things normalizes as fast as we can. However, don't put in money that you can't afford to lose. Just make sure that you have cushioned yourself to have some savings to run you for the next 3 or 6 months. No one who knows how long it will take for the situation to normalize, or for the stock market to be back to their normal prices or stability prices. Yeah. Number 2, have a watch list, and also be able to monitor the stock that you want to invest in. There's so many listed companies that we have at NSE. We have over 60 companies. So for example, you have maybe 5 companies that you want to put your money in. please go into detail and dig deep in terms of how the performance of that stock for the last, for example, 2 years. For example, if you picked a particular company, let's say you picked Barclays from banking category, so be able to see how has the stock price for Barclays been performing for the last 2 years, comparing it to Equity Bank and other peers in the market, so that you're able to observe a bit of stability and growth. But don't invest in companies whose stock price has been declining even without this crisis, because they'll take so much time to get to be stable, or even once they can even go down completely. So be able to monitor the stock price performance, at the same time be able to check their performance in terms of their sales, the dividend payout. Number 3 is invest in companies that are offering essential services. The reason why I'm saying that is because look at this scenario. We have 2 companies, we have KQ and we have Safaricom. People are still calling each other, people are still buying data. Actually, I saw a report of them saying they've made revenue or sales from the data bundles. So that means in these 2 companies, KQ might take such a long time to recover, because as the situation it is right now, they're operating at negative because they have salaries to pay, they have bills to pay, but they're only operating in cargo. And I think I saw them saying most of their staff have been quarantined, so there's just so much going on. So be able to check from your watch list whether those companies offer, or whether their services are really completely off or they're still in operation, because that will determine how long it will take for them to recover. The 4th item is diversify, and don't put all your money at once. Don't buy your stocks at once. The reason why I would like you to diversify, or it's just generally the rule of trading or the rule of wealth creation, is when you diversify, you're spreading your risk. So that means if one company goes down, you're still having other companies that you can still survive on. And the reason why I would say don't invest all your money at once is because we all want to buy when it's the lowest. I'm not so sure if the stock prices will go down lower than that, because I think right now the market is normalizing a bit. Maybe right now they can just stay there or just increase gradually. But the reason why I'm saying that is because maybe you might buy all at once today from your stock list, then tomorrow you realize a particular company, the stock price has gone down. You need to visit or talk to a brokerage firm. You need a professional advice. They give you into details on the situation of the scenario in the stock market, on the future of the stock market, so that you're able to know where you're putting yourself or where you're putting your money into. They'll give you all that professional advice so that you weigh and make the decision from an informed point of view. So last but not least, guys, every investment is a risk, just that the level of risk is very different. However, if you're not a higher risk taker, if you're not a risk taker, there are the likes of fixed asset income like bonds, treasury bills, fixed deposits. You can put in your money there. There's real estate, there's business. See if whatever you want to do, if you're not willing to wait, if you're not willing to be patient with the stock market, I'm not so sure if I would advise you to buy the stocks, right? That's all for me for today, guys. Remember to like this video, to share this video, and also to subscribe to my channel and hit that notification bell. Thank you, guys. Cheers and have a good time. Bye.